This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks set to open lower as traders digest mixed U.S. economic data, rapid geopolitical shifts, and a flurry of Trump's social media posts. The president sending weapons makers tumbling with an order to cut dividends and buybacks while targeting institutional investors over housing costs. Also ahead, Samsung's fourth quarter profit soars more than 200%, driven by higher prices for memory chips amid surging global demand. Plus, we're live at CES in Las Vegas talking robotics and AI with leading players and rising stars. Here's the setup for markets on the Asia session. We are expecting a bit of tepidness following that rally in the U.S. stalling overnight, but we also have geopolitics to continue grappling with Beijing ramping up the heat on Tokyo, launching this probe on anti-dumping related to chip-making material. That's something to watch for the session as well. But tech will be in focus. We had a decent handover from the Mag 7s, but now also the Samsung preliminary earnings for the fourth quarter, which show that operating profit more than double, helped along by these soaring memory chip prices. So perhaps helping to offset some of the negative sentiment on markets for the moment, Paul.
Yeah, you mentioned tech there, Avril. It was an interesting session in the US. We did see a little bit of softness in markets, but a number of asset-specific stories there. We had NVIDIA, Google, Microsoft, Amazon all having a terrific day, and you see that chart on the right, Mag 7 leading again, pretty much on a par now with the Dow. But then elsewhere, we saw the market retreat after a couple of those things you mentioned. President Trump signing an order now to stop defense companies from engaging in buybacks and paying dividends, and also seeking to ban institutional investment in single-family housing. So that weighed on defense stocks. Also, Blackstone weaker as well. Saw a little bit of movement in bonds, yields slipping. The 10-year now 4.14 handle. This is after U.S. job openings fell. ADP private employment also rose a little bit less than expected. So those bets staying alive for 2 Fed rate cuts this year. Oil prices still pretty stable around that $56 level for New York crude. A couple of stories there as well. The U.S. capturing 2 tankers carrying Venezuelan oil, one of them a Russian-flagged ship, and Venezuela's state-owned PDVSA also saying it's negotiating with the U.S. on future oil sales. Now, in that regard, the Trump administration says it plans to control future sales of Venezuelan oil and hold the proceeds in U.S. accounts. A statement from Energy Secretary Chris Wright is the clearest sign yet on Washington's strategy to control Venezuela's most valuable resource. Let's go to Washington and Bloomberg Balance of Power co-anchor Joe Matthew. Joe, thanks so much for joining us. What more do we know about this announcement from President Trump, and also an agreement, I understand, to use profits from Venezuelan oil sales to buy U.S. goods?
Yeah, this was all codified today by the press secretary and the energy secretary himself. Chris Wright is at a Goldman conference in Miami right now, meeting with the leaders of some of the very companies that are involved here, including Chevron, which is the only U.S. major that's doing work right now in Venezuela, and in fact is going to be receiving an expanded license. But the point the president said on Truth Social, we've got 50 million barrels, $2 billion worth of heavy sour crude from Venezuela, essentially gifted to the administration. The president says he will handle the marketing, essentially the sale of that oil and the refining of that oil. But now we learn that this, in fact, will be an indefinite supply. This was only the first batch of oil sent to the United States. Chris Wright suggesting that that will continue indefinitely as the infrastructure of the oil industry is built out in Venezuela and the government is established there. Remembering, Donald Trump said just as recently as 2 days ago that he runs Venezuela.
Those comments on Venezuela and comments as well on Greenland have made European leaders very nervous. What are we hearing on that front?
Well, my gosh, the Europeans don't love the rhetoric around Greenland, which the president has been talking about going back to the first term. But this was really kind of a laugh at the beginning of this second term. Nobody thought it was entirely serious. J.D. Vance did make a trip to Greenland and had some tough rhetoric, but it hasn't really been a front burner issue. Now that we're talking about the so-called Dunroe Doctrine, as they're referring to it here in the United States, indeed, the president's designs are on Greenland, and he appears to be serious. The question is, what does he want to do? The White House says military options are on the table. We've heard from Stephen Miller, the president's advisor, who says it's the United States' right to occupy Greenland. But we heard something different from the Secretary of State, Marco Rubio, who briefed senators on Monday and said the president, in fact, wants to buy Greenland. But the Danish are not really interested in selling it. And the Danish PM said recently that if the U.S. took over Greenland, that would be the end of NATO.
All right, Balance of Power co-anchor Joe Matthew there in Washington. Thank you. Well, China's launched an anti-dumping investigation into a key chip-making material from Japan, and a further escalation of their diplomatic dispute came a day after Tokyo rebuked Beijing for imposing new export controls. Chief North Asia correspondent Stephen Engel is in Hong Kong. So, Steve, tell us some more about this latest move.
Yeah, so it's sort of a little bit of a back and forth again, ramping up the tension between the two nations. Of course, coming off late last year, those comments from the Prime Minister of Japan, Takaichi-san, essentially saying that any invasion of Taiwan, of course, could be a survival-threatening situation for Japan. So that has led to all of this escalated tension and trade actions by China, mostly against Japan. Of course, you just mentioned those export controls, which we have been digesting the earlier part of this week on dual-use products that Beijing essentially says could be used by Japan for commercial and military purposes. An estimate, a broad estimate, indicates that about 42% of Japan's imports from China could be broadly classified as dual-use. So that would have massive implications, obviously, on industrial Japan. Now, this latest salvo comes after Japan diplomatic officials essentially, as you said, Paul, rebuked those export controls and sort of appealing for some sort of dialogue or pulling back, de-escalating those export controls. But Beijing, the Ministry of Commerce, essentially announcing that they are going to be launching potentially a year or a year and a half long anti-dumping probe into dichlorosilane, which is a chemical which Japan companies like Shin-Etsu Chemical, Sumitomo Chemical, Mitsubishi Chemical make that allows the silicon wafers to be processed into semiconductors. In fact, Japan is the global leader in ultra-high purity dichlorosilane. So China is really hitting Japan industrial strength, another pillar of its industrial strength, launching this probe. And that's why we're going to be keeping these companies in focus. This is the stock prices over the last week. We'll have to see how Tokyo opens on these potential companies and see what the long-term ramifications are going to be, as Beijing is not backing down on its trade pressure on Japan.
Steve, it makes you wonder how Washington is viewing all this, that Beijing is ramping up pressure on one of its closest allies, Japan.
Well, sure. So you see China and Xi Jinping essentially employing some of the tools that they used in the trade war with the United States, holding back or using export controls and a very complicated licensing process on key rare earths to the United States, which, of course, the United States and China negotiated down and had a mutual understanding. Now they're using a similar playbook on Japan to get Japan to back off, to retract, to apologize for those comments from Takaichi-san, which Japan obviously has not done. What is Japan's strategy? Possibly wait it out, keep the United States, keep Washington informed of their steps, and seeing if this could eventually die down. I did talk to the foreign minister of Taiwan, a month and a half or so ago. He thought this, dispute between China and Japan would probably last at least a year. So you're going to get these kind of back and forth messaging from Tokyo and from Beijing. Meanwhile, Washington is saying, don't rock the boat too much. because, again, we've had that hard-fought victory on the trade front with China. But at the same time, of course, in the Western Pacific here, Japan is clearly the top, if not one of the top allies of the United States. So it's a delicate balancing act. We'll have to see how strongly Washington, if this escalates further, how strongly Washington will come to the aid and to the backing, at least verbally, of Tokyo.
Steve, thank you. Our Chief North Asia correspondent, Stephen Engel. Now, let's switch gears and take a look at how Samsung is faring in pre-market. We, of course, got its fourth quarter preliminary earnings, and it showed profits soaring by more than 200%, though in early trading, we are seeing it trending lower. Now, these earnings were propelled by the surging global demand for AI servers and how that has driven up memory chip prices. Sales also beating estimates, rising 23% to more than $64 billion. Let's bring in Bloomberg Intelligence Senior Industry Analyst Masahiro Wakasugi. Masahiro, good to see you. What's your sense of what we've gotten from these Samsung numbers? They look like a really good set, even though the market seemed to be pointing lower. Was it the memory chip prices? How are you seeing that as an earnings driver in the year ahead as well?
Yes, good morning. The number looks very strong for the revenue and also operating profit. We don't have the breakdown of the numbers by the segment yet, but I think that if we calculate roughly the operating margin for the semiconductor segment, it should be quite strong. And of course, Micron reported quite strong number a few weeks ago, so it may not be a big surprise, but it's a quite strong number. So the operating margin for the overall company was Q4 21% around. And if we calculate the operating margin for the semiconductor division, it should be around 35 or 36% operating margin. And probably we can estimate that the DRAM segment operating margin exceeded 50% in Q4. So in that sense, Samsung is benefiting from that both DRAM and also NAND flash memory. And especially Samsung has a little bit higher revenue contribution from the conventional DRAM. And we are seeing very strong price hike for the conventional DRAM at this point. So that should be the main reason why Samsung reported a very strong number in Q4.
Masahiro, as you mentioned, this is a preliminary set of numbers. We don't have the segment breakdowns or the business outlook. What questions will the market be asking that they'll be wanting to hear when we do get those numbers later this month?
Yes, and probably market may have a quite high expectation for these companies, but I think that we can say that other DRAM makers, including the SK Hynix, or maybe for the NAND flash maker, Kioxia, or maybe SanDisk, could report similar strong numbers, meaning that the overall industry is seeing the very robust demand from the AI. So, and we think that the current strong situation for the demand in memory chips should be coming from the AI, and especially for the demand is shifting from the training to inference. So we think that this is a very secular and structural demand increase for the memory sector. So I think that should be a good sign for the overall memory companies, including SK Hynix or maybe Kioxia, and also maybe SanDisk. And going forward, the memory companies they have to increase the production capacity to catch up with the strong demand. And in that case, maybe we can see that strong demand for the chip making equipment, such as ASML or Tokyo Electron or Applied Materials going forward. So we should check how these companies will increase the capex going forward.
All right, Bloomberg Intelligence Senior Industry Analyst Masahiro Wakasugi there on those Samsung fourth quarter preliminary numbers. Still to come on the Asia Trade. We're going to take you to Las Vegas for the latest from CES, including conversations with Hitachi, drone maker AntiGravity, and cloud platform Tuya Smart. First, though, we'll be talking AI robotics with Boston Dynamics CEO Robert Playter. Much more ahead. This is Bloomberg. Interesting day for US equities. The S&P finished a little bit softer, but take a look at some of those tech names. A very good day for tech. Nvidia up another 1%. We also saw gains for Google, Microsoft, Amazon. It was only really Apple that was among the laggards there, and a big jump for Intel as well. So tech reclaiming its leadership position as the broader market showed a little bit of softness. Well, Boston Dynamics and majority owner Hyundai Motors says testing is underway for the next generation version of its humanoid Atlas robot, and it's going to be used at the car maker's factory in Georgia. Let's get over to the CES trade show now, where Bloomberg Tech co-anchor Ed Ludlow is standing by with our first guest. Ed.
Yeah, Robert Playter, CEO of Boston Dynamics, he really brought the idea of a humanoid robot to the company, and that was a long time ago. Fast forward to present day, there is a 2-hour wait to get into the booth and see what is a research version of Atlas, but you have the production version ready, and production is imminent.
Yeah.
Best place to start with all of the abstract discussion on humanoids this week, frankly. What is it that's changed that's allowed you now to say we have a production version of a humanoid robot?
Well, we've been building robots a long time, and so we've figured a lot out about how to, build a reliable machine that you could mass produce. And that's what we've introduced at CES this week. We're showing our research version. It's been running, that's the 2-hour wait to get into our booth. We've been running demos all week long. But we announced our mass production version that we're beginning to build out now. And we're going to scale production with Hyundai factories so that we'll be building these in the tens of thousands by 2028.
There is always going to be the question, how real is this, right? So you and Hyundai are partners. They're a customer, but you're also working together to continually test. What is it that Atlas is going to be doing in that facility? Is it revenue generating? In other words, is this a real commercial deployment?
Absolutely. So look, our humanoid is our third commercial deployment. We've already got 2 robots out generating revenue today. And so the commercial opportunity is real. What's special about Hyundai is that they're both a producer. They can help us mass produce. They can also be a consumer to use robots profitably in their factories. You know, they've defined their own software-defined factory initiative, and robots are going to be a part of that initiative to make their factories more flexible and productive.
The brain of Atlas, at least in the inference context, is NVIDIA. But a lot of this work you've done yourself on the software side in particular. Where would you say Boston Dynamics' core competency is, and how Atlas reflects that core competency?
We've always been the whole body coordinated motion first, right? We basically introduced robots like humanoids that could really, in an agile and coordinated way, move around in the world. And so our core competency is in sort of the motion control and the low-level stuff that's in close proximity to the hardware. We're going to be teaming with Google DeepMind for the high-level cognitive functionality.
Right.
So that tasks that go over minutes or even longer will be orchestrated by Gemini Robotics. So we're going to kind of split the low-level motor control and the high-level cognitive control.
How you train Atlas in the first instance, particularly in the industrial use case, is fascinating. There is a great emphasis on virtual worlds, digital twins. I think the reality is, teleoperation plays a role here, but how complex is it to get the humanoid robot to interact in a factory facility, taking into account the actual physics that's being applied to it in that environment?
Well, this is where AI has really provided a breakthrough. We can use simulation tools to coordinate the low-level motion of the robot, so reinforcement learning. We use teleoperation. If you can teleoperate a robot to do a task in a factory, you can pretty much get an autonomous policy doing that task. So we've already demonstrated that multiple times. What we need to do now is generalize that so that in a day or two you can train a whole new task. Because ultimately humanoids are going to need to do hundreds of tasks in a factory.
So therein lies the question, right now, what is the problem we're solving for? Literally labor shortages, which Jensen Huang's been talking about all week, or productivity, efficiency gains? What is it that you're selling with your products?
Well, the high-level goal is to onshore manufacturing that requires enhancements in labor productivity, and I think robotics have a strong role to play in that context. demographics are uniform the world across. We're seeing declining populations. It's difficult for manufacturers to get the talent that they want. So the robotics are going to take the dull, dirty, dangerous parts of the jobs. The humans are still going to do the high-level, cognitive, high-value tasks.
The Google DeepMind relationship, it's a research relationship, but Hyundai has the potential to grow to something commercial at scale, right? I think that's kind of your vision.
Yeah.
We're talking a few hundred units at first, but would you just kind of outline a roadmap, a timeline of how you see scaling?
So the relationship with Google DeepMind is both a research relationship, but also a commercial relationship. So our plan is we're going to build 200-300 of these robots. We're going to use them to collect data in factories at Hyundai, also at Google DeepMind facilities, also at our facilities at Boston Dynamics. Together we'll develop the technology and then we'll commercialize them together. And the first application, again starting at Hyundai, will be to deploy robots in factories doing part sequencing and eventually final assembly. We will also work with some other customers along the way in logistics or other manufacturing applications.
I guess my question is, we're talking a couple of hundred this year, maybe a few more hundred next year, thousands the following year. What's the pathway?
So by 2028, Hyundai's going to build us a purpose-built factory designed for mass manufacture of our humanoids. And that's going to have a capacity of between 10 and 30,000 units per year. And so that's the goal. By 2030, we'll be building tens of thousands of robots per year.
I've always wanted to ask you, and I'm going to ask you, your analysis and impressions of Tesla's Optimus program and your assessment of what they're doing and what they've done.
Well, I think they're a very serious competitor. They've done a lot of very impressive work. They also have the advantages we have, that they have a consumer in Tesla to use those robots
internally.
Yeah, and I think it really requires both aspects. You need the technology from robotics and AI. You also need that customer and that consumer, and so automotive is a natural fit. And so I think Tesla is actually very well placed to succeed here as well.
There's a different vision of the world, and all those people that are waiting 2 hours to see Atlas might have that vision where a humanoid robot's in their home, childcare, elderly care, manual tasks. Is that something that you are working toward as well, Robert?
Absolutely. We're starting in manufacturing because we think that's the right place for the cost point, safety, and the capabilities of the robot. But as we mass produce these, we're going to drive the cost out. We're going to increase capabilities because now we're going to have tons of data to train these robots on, and they will enter the home. And I'd say 5 to 10 years before they're in the home. In the next 5 years, it'll be focusing on manufacturing.
Robert Playter, Boston Dynamics CEO. He's got to go back to the booth for crowd control with the 2-hour wait to see Atlas. From Las Vegas, back to you guys across Asia Pacific.
Incredibly popular product that everyone is chomping at the bit to take a look at. Ed Ludlow, great stuff. Thanks so much. Ed Ludlow at the CES in Las Vegas. More ahead on the Asia trade. This is Bloomberg.
Take a look at how shares in BlueScope Steel are tracking here in Australia, are giving up about 1% at the moment. This is after the company rejected the latest takeover offer from Steel Dynamics and SGH, saying that $8.8 billion joint offer significantly undervalues its assets. The chair of BlueScope, Jane McAloon, says this proposal was an attempt to take BlueScope from its shareholders on the cheap, and it's the fourth time we've said no. So BlueScope knocking back that takeover bid, shares off about 1%. We have more ahead on the Asia trade. This is Bloomberg.
We got breaking data coming out of Japan for the month of November. These are the labor cash earnings, and this is coming in much softer than consensus estimates at 0.5% for the month. This is a cooling from the prior reading, although the sense you get is maybe not enough to derail the BOJ's view that there's a tight labor market still that's feeding into upward pressures on wages and and that in turn, of course, is feeding into inflation for the moment. We are seeing dollar yen looking quite sleepy still. We have, of course, a 30-year auction of JGBs later today as well. Now let's take a look at Samsung in the early goings. This is pre-market, of course, following its 200+% jump in profits for the fourth quarter in preliminary earnings. This is, of course, South Korea's largest company, and it is reporting that operating profit of 20 trillion won, revenue rising 23% to 93 trillion, and perhaps helped along by the surging global demand for AI servers that's been lifting prices for memory chips. Let's get analysis now with Daniel Kim, Head of Korea Research at Macquarie Capital. Daniel, great to see you. So what's your quick take on what Samsung has unveiled now?
Thanks for having me. Good morning. Yes, the number is quite impressive. And 20 trillion won is the highest number for any Korean company's quarterly profit. And the point is, the best is yet to come for Samsung Electronics, because we expect the strong memory contract price to continue in Q1 and throughout 2026, because this is quite structural shortage in memory chip.
Yeah, I think the Samsung executives have been out even at the CES event talking about the memory chip shortage, how that's been driving prices and is likely to continue doing so. What are your projections for that into Samsung earnings for this year and the next?
I think the memory profit growth will drive total Samsung's total profit. And we expect the Samsung Electronics will register more than 100 trillion won net profit this year. However, I have some mixed feeling, because the memory semicon division will enjoy unbelievably high profit margin, but that is coming at the expense of the other division, because the rising memory price means throttling the entire tech supply chain, from smartphone, PC, server, even in auto industry. So, for example, Samsung smartphone division is facing a steep cost increase, and their margin will be squeezed. So, but overall, yeah, I think the Samsung will enjoy strong earnings momentum this year and likely next year. And a couple of reasons behind that, because the planned supply capacity expansion is way too small compared to the strong demand from AI server. And supply response is quite slow and structurally limited. So that's why we are going to see one of the longest memory upcycle. And Samsung Electronics and all the other memory companies in the world are likely to enjoy very, very strong profit growth and fat margin for the next 2-3 years.
Daniel, you're painting a very optimistic, bullish picture here. We've got 200% profit increase reported today, the best yet to come. Demand picture is strong. Why in the pre-market are we seeing shares slip, and why could we see declines for Samsung today?
I think this is a typical, buy on, sell on news. It's more like a short-term, one-day event. But after today, I'm pretty sure, I'm expecting that the memory stocks, including Samsung Electronics, will be on the positive trajectory.
Previously, we've seen Samsung underperforming SK Hynix, its local competitor. How do you see that competition evolving over the course of 2026?
Well, the more important thing is the pie is growing quite fast. So that means lifting all the boats. So the Samsung underperformed SK Hynix, especially 24 and 25, because Samsung struggle in the HBM space, especially penetration into the NVIDIA HBM market. But Samsung secured other key HBM clients, and plus, I expect Samsung will have some market position within NVIDIA from HBM4 space. But much more important thing is HBM is now less important than before because HBM is less profitable than commodity DRAM, and ironically, the legacy DRAM is far more profitable than mainstream DRAM, and Samsung luckily has a bigger exposure to commodity DRAM and the legacy DRAM. As a result, the strong memory pricing has a more leverage, more impact, positive impact on Samsung earnings. So I think Samsung underperformance against Hynix or Micron in the US, those days are gone.
So it sounds like it's going to be all about DRAMs for Samsung, just about. What is the price target in your mind?
We have 240,000 Korean won target price for Samsung.
That's a substantial increase, Daniel. Do you see that being achieved this year?
Yes, I think given the strong earnings momentum plus Samsung is trading at still 10 times PE. This is probably one of the cheapest AI stocks. So in my view, it's hard to find a better investment case than Samsung in whole AI tech supply chain.
All right, Daniel Kim, Head of Korea Research at Macquarie Capital. Thanks so much for joining us with your views. Let's get to some of the top global headlines that we're following. U.S. defense stocks rose after the bell after President Trump said he would request a more than 50% increase in next year's military budget to $1.5 trillion. Shares had tumbled earlier as Trump called for military contractors to cut dividends and buybacks. He also threatened to stop doing business with RTX unless the Patriot missile maker invests more in its production capabilities. Shares of home builders tumbled in the US after President Trump announced a ban on institutional investors from buying single-family homes. Blackstone, a major investor, pared some losses before closing 5% lower. The announcement is a bid to address housing affordability ahead of this year's midterm elections. Protests have erupted in Minneapolis after an immigration and customs enforcement officer shot and killed a woman in a car during a confrontation. President Trump says the officer appeared to be acting in self-defense, alleging the victim acted in a disorderly and obstructive way. The Minneapolis mayor has called on ICE to leave the city.
What they are doing is not to provide safety in America. What they are doing is causing chaos and distrust. They're ripping families apart. They're sowing chaos on our streets. And in this case, quite literally killing people.
More ahead on the Asia Trade. This is Bloomberg.
The latest from the corporate front, Warner Brothers Discovery has rejected the latest takeover offer from Paramount Skydance, encouraging shareholders to stick with the Netflix deal. Warner's board says it doubts Paramount can close the deal, which carries significant risks. Billionaire Larry Ellison has said he would personally guarantee $40 billion in equity financing for Paramount's hostile bid. AI startup Anthropic is said to be raising a new round of funding that would value the company at $350 billion. Sources say the cloud chatbot developer seeks to raise $10 billion in the round. We're told Singapore Sovereign Wealth Fund and Coatue Management plan to lead the financing, with Microsoft and NVIDIA also expected to participate. Beijing-based ZAI is set to start trading in Hong Kong today, operating under the business name Knowledge Atlas Technology. It raised more than $500 million in a public market debut that puts it ahead of competitors, including OpenAI and Anthropic. The company runs a ChatGPT-like web-based AI service and says it's now accelerating its push to gain exposure and users overseas. And we'll hear more from ZAI co-founder and chairman Liu Debing in an exclusive conversation later on the China Show. That's at 9:30 a.m. in Hong Kong, 8:30 p.m. in New York. Time for the moment to head back to Las Vegas, where CES is in full swing, and our co-anchor Sherry An is standing by with our next guest. Sherry?
Hi, Avril. So we are now on day 2 of CES, where companies are announcing new gadgets and upgrades, and of course, very much focused on artificial intelligence and how to capitalize that. One of the exhibitors is Hitachi here, and they're trying to really focus on physical AI, and of course, they're a technology solutions provider. And joining us now is Shashank Samant, Hitachi Senior Vice President and Executive Chairman. Really great to have you here and see you in person after all of these years.
Yes, after 5 years.
So tell us a little bit about what Hitachi is trying to do, especially in 2026, where the focus is not only on artificial intelligence, but the convergence between the digital and physical.
Yes, so Hitachi's business segments are all social infrastructure, which is energy, which is mobility, which is rails and all, which is manufacturing side, including cancer research all the way proton beam therapy to actually battery in research and those areas. And those areas all touch the social infrastructure, which is all of us daily lives. Now, if you see the NVIDIA's press release and NVIDIA's talk about it, what Jensen said the other day, is all about physical AI. That is actually Hitachi's era. So as we are looking at future, Hitachi is already launching HMAX, which is trying to use the artificial intelligence technologies along with our physical data. We're in operation for almost 110 years. So we have enough amount of physical and digital data. We also have the industry knowledge, and we are trying to marry that with algorithms, with our partnership with NVIDIA's and Google's and OpenAI's of the world, and try to make our assets more intelligent. Trying to make it actually not only just efficiency, but acceleration side.
To be fair, I saw a little bit of a hit on Hitachi stock this week because NVIDIA, Jensen Huang was talking about how the Rubin chips will not necessarily need the water chillers. And of course, you're famous for data center cooling gadgets as well. Is that a concern?
I don't think there is a concern, because if you see the 5-layer cake which he talked about, we are all about energy, which is number one in the areas which we operate, transmission, distribution, transformer, all those areas, which has to power it, including generation, VG. Number two, actually, the chip side, we have chip manufacturing equipment, which goes in TSMCs and others of the world. And number three, infrastructure side, that is the area, all the areas we talk about coming in together. Storage all the way to the energy infrastructure. So out of 5 layers, 3 of them we are essential, and 2 others we are consumer. So we are creator of the AI infrastructure and a consumer for transforming our own business.
Do you see, though, the trend going that way, and what happens to the cooling device business?
I think cooling will constantly going to evolve from currently what he talked about, right, from water cooling, and try to have less consumption of that with 46 degrees centigrade and all, and trying to go further along in that particular line in terms of the liquid cooling and immersion cooling. And Hitachi will follow that. The reason is Hitachi always thinks not just three years ahead, but 10 to 15 years ahead. And that is the area. Innovation is everything about Hitachi. That's what is our R&D, and that's what we go towards.
Long term, how are you looking at the China business, especially with the export controls on Japan?
China is an important part of our business. If you see Hitachi's business, more than 60% is outside Japan now. And if you take China or Americas or Europe are the fastest growing segment for that particular side. So we have that business which continues on that particular side. Our elevators and other areas come from that business for that market. But plus actually also our increasing focus, given what's happening with AI and the infrastructure side, is Americas and Europe at this point.
Because we are seeing in Japan, of course, the government trying to expand its national defense budget as well. And that includes digital infrastructure,
yes,
right? And Hitachi, of course, plays a big part in there. Will that have implications with your relationship with China, though?
So out of $70 billion of our business, $20 billion is DSS, which is Digital Systems and Services. It would have been independent business, it would have been probably around 5th largest in the world in that side. And that business deals with the national security and other areas in Japan, as well as financial services and other areas. By the way, that also is our backbone when we are trying to transform ourselves with digital technologies. If you remember last time you talked to me about, I'm the founder of Global Logic, right? Global Logic 5 years years back Hitachi acquired, that become the core of Hitachi digital transformation, taking next level now to the AI transformation. And that's what we call HMAX.
Right.
HMAX is where actually the technologies come together, digital and AI side, along with physical infrastructure, and trying to transform it.
And the Internet of Things Lumada platform, of course, is also a key part of your business.
Yes, so Hitachi launched Lumada in 2016, 2017, trying to have all the software assets coming together. We are now in the third cycle of Lumada 3.0, and that is a manifestation into HMAX. That is a platform. Okay. So Lumada is a manifestation moved from software assets to digital assets, now to AI assets.
So 50% of sales coming from Lumada by fiscal 2028, and you're on track.
We are very confident about it.
Okay.
It will actually go even further. If you see our internal plans, it's going to go even further because we believe that at the end of the day, software is going to run the world, and so is AI. And that's what Hitachi is actually standing tall.
We were talking about bringing it into the physical world, artificial intelligence, and humanoids, of course, the biggest rage right now. I saw reports that you guys are thinking of using it in electronics manufacturing. Is that correct?
That's what we are scouting the floor. It's very important. The reason for that is most of the industries which you operate, we need to have a very skilled manpower. So unlike many other industries, we are not worried about AI taking over the jobs. We actually want to have more people in electrical, mechanical, people who actually can winding the transformers and all those areas. And we are looking at technologies where we can use humanoids for that, because that is one of the limiting factors. Remember last time you asked me 5 years back, what is the limiting factor for Hitachi's growth of business? That time my business, Global Logic. And I said, talent. That is even true for Hitachi's business today. So it's very important for us to have humanoid, intelligent humanoid, not just assembly or the line assembly, but actually which are asynchronous humanoid, which is important for our business.
Where's the talent coming from? I read that you are trying to get 50,000 AI strategists. Are they coming from within Japan? Are you hiring from overseas?
Globally. The reason is Hitachi has totally 280,000 employees. 110,000 out of those are in DSS segment, which is software and services. And more than half of that are already AI enabled. Okay. So we have the entire wing, which is trying to transform our own manpower. And this is not just one country, because our demand is spread across. We are not just one geo company, right? Whether it's EMEA region, whether it's over here, whether it's Japan. So we are constantly trying to. The reason for that is our clients depend on us to transform themselves. Like they're a little further regard. So we have to do that on our own.
Shashank, really good to see you in person after 5 years, as you said, and here in Las Vegas at CES. Shashank Samant, Senior VP and Executive Chairman at Hitachi. And Paul, of course, this is day 2 for CES, and we'll continue to bring you coverage from Las Vegas.
All right, thanks, Sherry. That's Bloomberg Sherry Ann there in Las Vegas. Well, Infineon's CEO says AI now accounts for 10% of the group's revenue. Johan Hannebeck spoke with Bloomberg at CES on his current priorities.
It's all about efficiencies, and we need to make sure that the power flow is not becoming the bottleneck for the race in terms of AI compute performance. And we are doing there very well. After tripling our revenue last year to the previous year, now we are targeting to double this revenue again this year, and this is capacity limited, not demand limited. So a really nice growth story across many products, many technologies, wide bandgap technologies, silicon technologies, modules, controllers, analog parts. So a great growth story for Infineon.
And then, which partners are you focusing on in particular for this as well? Because it's obviously a build-out that requires a very large ecosystem.
Yeah, absolutely. It's a very large ecosystem. And you have many of the key players, of course, here in California, but also elsewhere in the world. In Taiwan, we have key players taking care of power supply units, battery backup units. But, of course, it matters a lot for us to engage here with the hyperscalers and the GPU makers.
So you're talking about that expectation around revenue. I think you're looking at it to grow by more than maybe 100% this fiscal year or this financial year. But in terms of the overall revenue mix or the contribution that AI makes, how much more do you see it being a part of the business?
it grows now to 10% of the group's revenue. So it really becomes relevant. It becomes visible in our top line and bottom line numbers. And I think the 10% is not the last statement. I think for the future, we will enjoy more growth because the power semiconductor bill of material in a rack is growing strongly. If you have, like in the current generation, $15,000 of power semiconductors per rack, that number will go up all the way to $100,000 per rack in 2030. So besides the number of racks, besides all the capital that is invested, we are enjoying a specific growth driver because much of the increased compute performance comes out of the fact that more power is delivered into the processors.
Mm-hmm. Automotives is still a large part of the business, though.
Absolutely.
Yeah, and this has been a market that's had quite a few headwinds as well. What does that look like for you for this year?
Yeah, it's puts and takes. On the one hand, the e-mobility is clearly in a slow-growing phase. In the US, the market is very slow. In China, also things are tapering off in terms of volume. There's price competition. In Europe, there's some growth, but we can make use of the capacities which we have, which we were used to apply for electric vehicles and dedicate them to AI.
That's Infineon CEO Johan Hannebeck speaking with Bloomberg's Annabelle Drillers at CES. We have more ahead on the Age of Trade. This is Bloomberg.
Let's take another look at what we got out of the Samsung fourth quarter preliminary earnings. Record profit from this chip giant. And even though we're going to have to wait towards the end of this month for a further breakdown on how its specific divisions contributed to the bottom line, given what we got from Micron, that upbeat forecast, and what we've been seeing in memory chip prices, that seems to have contributed to Samsung's really stellar profit, the scorecard so far. We are, of course, in early market goings, seeing that negative indication, and this might be, as some of the analysts we've been speaking to earlier, because of the sell effect. But also keep in mind that maybe what consensus is telling us is not quite even keeping up with this very positive sentiment that's coming through on how memory chip demand and prices are actually contributing to all of this. Markets open next in Seoul and Tokyo. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Paul, the expectation is that the rally we've been seeing so far this year runs into a bit of a wall, given what we saw in Wall Street overnight, even though the Mag 7s did pretty well.
Yeah, that's right. Some things you can continue to rely on at the moment. Some of those big US tech names performing pretty strongly. And we had some breakout numbers from Samsung earlier in those preliminary fourth quarter results, although we don't have the segment by segment numbers yet, nor the business outlook.
Yeah, so that's something that we are watching, especially given the backdrop of geopolitics and how we're seeing Beijing really ramp things up against Tokyo as well, whether that figures into the equation for trade. For the moment, we are seeing the Japanese stocks, after already pulling back from those record highs earlier in the week. Remember, it was like a stellar start to the year. As an extension of those declines, when it comes to Beijing, it's not just these export controls controls that are kind of being put in place now. It's also how there's a probe being launched in relation to chip making material that goes into Japan. And we are also seeing the data figuring into things because we got those labor cash earnings for the month of November out of Japan, and it was a surprisingly soft number. So the BOJ might be a bit less excited about an early rate hike now. You are still seeing, though, that dollar yen not really giving us that much direction. We are, of course, today watching out for the 30-year auction, and after what the 10-year auction told us earlier in the week, pretty solid demand in line with the 12-month average. Maybe this bodes well for the longer end sale later today. Let's take a look at how South Korea is faring in the early goings. It's going to be a lot to do with Samsung. We are seeing it as the pre-market flagged, trending lower. And this is, of course, a stock that has been seeing really big moves in both directions so far this year. We are also seeing that there's a bit of a reversal to the move yesterday. Worth noting that it was the Kospi that led things, and then the Kosdaq was trailing just a day ago. But you're seeing a bit of that reversal for the moment, and 1450 thereabouts is where we're seeing dollar Korea won. We're going to continue tracking the chip-related stocks in the session today. Paul.
Well, let's take a look at how U.S. debt is trading in Tokyo at the moment. We've got the yield on the 10-year just ticking up ever so slightly. It was 4.14 at the close of the U.S. session. We did have some data out of the U.S. Job openings falling. ADP private employment numbers, though, rising a little bit less than expected. Suffice to say, bet's still alive that the Fed will ease twice in 2026. Have a look at the oil price as well, posting some modest gains there because we had some news flow on that front as well. The U.S. capturing two more Venezuelan tankers, one of them Russian flagged after a chase through the Atlantic Ocean. President Trump also announcing that Venezuela will buy only U.S.-made products with the money that it raises from oil that it sells to the United States as well. Now let's take a look at how S&P futures are tracking. Meanwhile, pretty flat. It was an interesting day for U.S. markets. The S&P slightly weaker, but those big tech names, well, continuing to shine. Avril.
That is a really interesting dynamic because it seems to also be, in a way, playing out in South Korea. When you look at this chart, it shows you the dispersion between the Kospi and the Kosdaq. This was a phenomenon that we saw just a day ago. And investors, for the most part, still seem to be piling into these big cap blue chip names. But that's leaving these mid-cap, smaller names as well in the dust. Let's bring in, for some analysis, our executive editor for Asia Markets, Paul Dobson. So, Paul, a couple of days into the trading year, it's been quite an exciting start. Today, we're watching the market reaction from Samsung preliminary earnings. What are you seeing in the potential for broadening out of that market enthusiasm?
Yeah, certainly a lot of the commentary, a lot of the voices that I'm hearing around the market are very positive on Asia, and particularly North Asia, coming into this year. Not just the tech story, but even the geopolitics, they're saying, is going to drive more competition and therefore boost the performance of technology companies as well. And then they flag a very favorable global macro backdrop, and if you look at interest rates coming down, very healthy demand for bonds right around the world at the moment. You can see that already starting to play out a little bit. Funding conditions are still very good for companies. And in general, the global economy has been holding up much better than people expected, given the tariffs and the geopolitics and all of that kind of a backdrop as well. So many favorable kind of circumstances for the markets, which is probably why we got off to that really huge start that you were talking about. Yes, a little bit of a setback and a pause for breath yesterday. It wouldn't surprise me if markets, are looking a little bit rosier by the time we hand off to Europe today.
Paul, could we say that 2026 is going to be brought to you by the letter K, with tech doing well and everything else kind of meh?
I'm not so sure that it's just going to be a tech story because, like I said, that global economic backdrop is looking favorable and supportive. The Fed is likely going to cut interest rates more at some point during the year. They're telling us as much in the dot plot. That will allow room for Asian central banks, except for Japan, of course, to cut interest rates as well if they want to. And, you know, they continue to push that sort of trade. So it does feel like, yes, technology can continue to be the driver, but it doesn't necessarily mean that everything else is going to have to trail in the wake. I think K, though, is a good concept overall to think about, especially for the US economy as well, where you continue to see, you know, the harder up parts of the society really having a tough time while middle and upper classes continue to spend like Billy Ho. And so there is that divergence there. And that is something that the Fed is paying a lot of attention to at the moment.
Yeah, the continuation of this split track in the economy. Paul, thank you so much, as always, our executive editor for Asia Markets, Paul Dobson. Now, let's unpack a bit further. Samsung's fourth quarter profit soaring by more than 200%, so tripling, and then surging global demand for AI servers, driving up memory chip prices, sales beating estimates, rising 23% to more than $64 billion. Our Bloomberg Asia stocks reporter Yu Kyung Lee joins us now. So, Yu Kyung, it looks like a good set of numbers, but the reaction in the market seems to be a bit sell the fact. What is your take on what's going on?
Yeah, I'm not really surprised by the reactions in the market today. We're seeing the Samsung shares trending a little bit lower today, but I think the market is going to see this as largely as a blip rather than the change of course or change of direction in the Samsung share performance. If you look at today's this year's performance, Samsung shares have risen 18% so far this year. We only had 5 trading days before today's open, and this share is the largest one in South Korea and up 18%. In 5 trading days. That's really impressive. An investor might be looking to take some breather after that. I was talking to one analyst this morning, and he said any dip you see in the memory chip stock is an opportunity to buy. And I think that remarks show the sentiment in the market. It's really dangerous to bet against the memory chip stocks. And I think the question is whether you have enough, not whether you want to buy something else, but whether you have enough memory chip stock. That was the one question that another analyst was saying. He was asking to his clients, you want to have more memory chip stock in this type of bull market. And if you look at where this memory demand is coming from, it used to be in your PCs, servers, but now we're also seeing new areas of humanoids, physical AI, and this AI moving from training to inference that's creating exponential demand for memory chips. So another person was telling me that only 70% or 60% of the memory demand has been met by the clients. So 40% of clients are unable to find the memory chips they want to buy, and they're willing to pay premium. So we saw a huge price hike in memory chip prices in the fourth quarter at the end of the last year, and analysts are expecting that memory chip price hike is going to be even steeper during the first quarter of this year. So this is going to be a really great year for Samsung and other memory chip makers, SK Hynix and Micron in the US.
So, Yu Kyung, memory certainly looks like a safe bet based on what you're unpacking there. But how about the rest of Samsung's business? Is it coming at the expense of health and phones and display as well? What more do we know about the other segments?
So we don't have many details from the other segments, but what we have so far heard from the media reports and analysts from the market is that the mobile phone department is also probably going to post a pretty healthy profit at the end of the last quarter, at the end of the last year. And I think given that some of the most bullish estimates of Samsung's operating profit say that the operating profit is going to triple this year from last year, other segments outside chips have done pretty well. But, Samsung is mostly seen as chip stocks, even though its business span to other businesses, mobile phones, TVs, and telecommunications. But it's largely seen as a chip stock because semiconductor accounts for so much part of its revenue and also for operating profit. And that is enjoying a really, really good year. So, and one other thing I want to point out is that Samsung is going to post operating profit that's projected to be on par par with TSMC. But if you look at the Samsung's market cap, it's less than half of TSMC, which is Asia's most valuable company. So there's a reason that a lot of investors still think that Samsung is pretty cheap, even after its rally that put the stocks more than double last year.
All right, Bloomberg Asia stocks reporter Yukyung Lee there. Now we're watching Japan's chemical stocks after China launched an anti-dumping investigation into a key chip-making material from Japan. This is a further escalation of their diplomatic dispute, and it comes a day after Tokyo rebuked Beijing for imposing new export controls. Our Chief North Asia correspondent Stephen Engel is in Hong Kong. So, Steve, tell us more about this latest move.
Yeah, so the latest salvo from Beijing to punish Japan for those comments, of course, late last year from Takaichi-san, the Japanese prime minister, essentially saying any invasion of Taiwan would be a survival-threatening situation for Japan. And Japan has not backed down. They have not retracted their comments. They have not apologized. And China is ramping up the pressure. Of course, we can talk a little bit about those export controls that were implemented on dual-use products sold to Japan. But the latest salvo is on dichlorosilane, which is a chemical used for thin film process for the making of analog memory and other kind of analog chips. It's essentially a chemical that Japan has an expertise in that helps turn silicon wafers into semiconductors. And Japan actually is the global leader in ultra-high purity dichlorosilane. So Beijing knows where to hit. They're going to be launching, as of now, an anti-dumping probe into dichlorosilane producers in Japan. That Ministry of Commerce in China essentially says could last a year, possibly as long as a year and a half. So again, like I said, Beijing is finding ways, like they did with the United States on their export controls through that trade war, to critical rare earths and critical parts of the what the United States needed to import for the high-tech industry. China is doing the same to try and punish the Japanese. And those export controls as well on so-called dual-use products, which, 42% in 2024 of Japan's imports of Chinese products, 42% of them could be classified essentially as a dual-use product or item that has commercial use as well as potential military use. So again, they know where to hit industrial Japan quite hard. In fact, 70% of Japan's rare earths imports come from China. So again, this is a tactic being used by China to try to evoke an apology, a retraction, a de-escalation by Japan admitting it was wrong, which it hasn't done so far. So that's why you're seeing companies like Shin-Etsu Chemical, as well as Sumitomo Chemical, Mitsubishi Chemical, they are feeling the pain, at least today, after that announcement from the Ministry of Commerce in Beijing.
Steve, where does the U.S. stand in all this?
It's a good question, because obviously the biggest ally in this part of the world, along with South Korea, is Japan. But again, the Trump administration had a long, hard-fought, I guess you could say, they would say, a victory in their trade negotiations with China to get the logjam on the export controls broken and the rare earths and rare earth magnets shipping to the United States after a long-fought negotiations. Well, obviously, the Trump administration doesn't want Takaichi-san, who you see here, rocking the boat too much to threaten that long, hard-fought truce, if you will, with China. But at the same time, we'll have to see if this escalates further. As Xi Jinping has indicated, he wants to and will use those levers. Will the Trump administration come and verbally and vocally support Takaichi-san in their steadfast position of not backing down? It looks as though Tokyo essentially is playing a wait-and-see game while keeping Washington abreast of its moves and waiting to see if it's going to take 6 months, a year, or even longer for things to de-escalate. But right now, it looks as though things are escalating before there's any chance of course, de-escalation.
Steve, thanks so much. Our Chief North Asia correspondent, Stephen Engel. Now we have some news crossing the terminal in relation to the convicted sex offender Jeffrey Epstein and the investigation surrounding all that. We're since hearing that in relation to the probe, a top Democrat on the House Oversight panel says that he has secured a subpoena for Les Wexner. This is, of course, a billionaire retail tycoon, and he was previously cited as among 10 of the co-conspirators in relation to the case, and that was, of course, in relation to emails disclosed by the Justice Department late last year. So we'll continue keeping watch on those developments in relation to this probe. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Now, AntiGravity, a drone brand from China's Insta360, has unveiled its new 8K and 360-degree drone in a challenge to industry leader DJI. Let's head back to CES in Las Vegas, where Asia Tech correspondent Annabelle Jolas is with our next guest. Belle?
Thanks, Avril. Yeah, I'm pleased to say that we're joined this morning by Michael Shabun. He's CEO of AntiGravity. Well, congratulations on launching this new product that you have, and just talk us through it, because obviously the drone market is highly competitive. There's a lot of different products on the market as well, but in your opinion, what makes yours different?
Well, from the first moment that we incepted the product, we wanted to do something that nobody else did. And the AntiGravity A1 is the world's first fully integrated 360 drone. That means it captures everything around you, and you don't need to worry about where the camera is pointing and where you're facing. All you do is enjoy the flying experience, and then you can pick your angles and moments later in post. So what that allows you to do is anybody who's thought about flying a drone, but you're not a trained camera person, or you don't know how to compose shots, it gives you the ability of a professional creator in something that's small and easy to fly. So we basically opened the market for people that never even imagined that they would be able to fly a drone.
Mm-hmm. We've just been actually showing it to our viewers as well. You can see there, but this is a drone that was 5 years in the making, or you were saying 10 years really, if you count as well the input from Insta360 as well. What's been the reception so far to it, and where are you seeing most sales?
Yeah, so actually we started shipping the units a little less than a month ago, and since then the feedback has been remarkable. People are really understanding that this is something new that they haven't seen before, and for existing drone pilots, they realize that it's a level up on what they've experienced before, which is a single lens fixed drone that was limited in where you could fly it and how you could fly it, to now being able to capture everything. And then for consumers at home, it gives you the ability to experience the world in a whole different way. So again, yes, this is 5 years of R&D and about $150 million in development. Plus, our friends at Insta360 really helped incubate this company by allowing us to use their 360 technology. So the way it works is there's a lens on the bottom of the drone, there's a lens on the top of the drone, and the software stitches both lenses together in real time. And when you put on our goggles, you're getting a fully stitched 360 video. You can look around in any direction. So like if you've ever used a VR headset with pre-recorded content on it, you get to experience that, but in real time. And the drone can be hovering in one direction. You can be looking around in any direction in the headset, independent of where the drone is moving. So there's a ton of different use cases for this drone. From a consumer standpoint, you can, let me back up. Here's what I tell everybody. When you're flying a regular drone, you're flying a camera, and that's really, really cool by itself. When you're flying the AntiGravity drone, you become the camera and you become the drone, and you're soaring through the air. So as kids, we used to have 3 different types of dreams. We were either running away from something, falling, or flying. This brings you back to those childhood dreams.
I do want to ask, though, the timing of the launch is probably not what you wanted to see with the FCC ruling on restricting foreign-made drones. How is that actually impacting your business, and what changes do you think you need to make as a result?
Yeah, the timing is interesting, but fortunate enough, the A1 is fully FCC compliant. It's available for sales in the U.S. and actually in over 100 countries worldwide. And repair business is strong, so if anything ever happens, you can ship it and get it serviced. So there's no issues for the A1. For future products, we are definitely looking at all options right now, including U.S.-based manufacturing. And in terms of our worldwide split, I would the U.S. and China performed very well for us in the first month, but Europe is not far behind. I would say it's a pretty equal split between all regions worldwide.
So as you think about anti-gravity and the markets that you target, would you say that you would be deprioritizing and de-risking from China if you're looking to maybe manufacture away from the mainland market and also to seek growth markets outside of China?
Well, it's not essentially deprioritizing China. It's coming up with a better way to sustain the business long term. China is always going to be a consumer market for us. Folks in China absolutely love the anti-gravity A1, so we're not going to veer away from that. But we're also going to make changes to the business in order to make sure that the U.S. consumers can get the latest and greatest anti-gravity products. So, yeah, all options are on the table. We also are working with our lobby groups and legal partners to explore what the boundaries are of the new term. So it's very early right now. This was just announced, and I think other companies are kind of in the same boat where we're evaluating and seeing what's possible.
Okay, yeah, you certainly got a lot to grapple with, I guess, as a CEO in this position. But what do you think then in terms of the fundraising outlook? Because you have some, obviously, you spun out of Insta360, you've had some very high-profile backing. How much capital do you need essentially to move forward, and where are you looking to source that?
Well, actually, when VCs and private equity investors started hearing about the anti-gravity, folks were throwing money left and right at us. This is not a joke. We're oversaturated in how many requests we had to get, but our main goal is to make this a truly global brand. And we have VC money coming in from North America, from US, Canada. We have VC money coming in from APAC regions. So we're very open in terms of our global priorities. Long term, we're in a Series A round right now, and we've raised about $200 million at the moment, and that's to sustain the business long term and to fund our R&D efforts for future product lines.
What valuation on that?
$1 billion.
Okay. And you mentioned earlier that you're looking at targeting an IPO or a listing in the US market. What's the thinking around that, and what would be the timeline?
That's our ultimate end goal. Obviously it's the company just launched and it's very early, but we're long-term thinkers, and when the company is ready, we would like to IPO in the US stock market. Again, timing too early to tell, but we'll see after a couple more generations of the product.
All right, Michael, thanks very much for joining us this morning. That was Michael Shabun there, the CEO of AntiGravity. Paul, I'll hand it back to you, but as we said, our coverage at CES is very much continuing, and AntiGravity really has been one of the major exhibitors here as well.
All right, thanks, Annabelle. Annabelle Drew is there in Las Vegas. We have more ahead on the Asia trade. This is Bloomberg.
Watching the Asia trade, take a look at how Asia defense names are rallying hard. And this is following on from what we saw overnight in the U.S., where Trump really said that when it comes to increasing the investment in production as well as research, do that for these U.S. defense names. Otherwise, that could mean they can't engage with share buybacks or dividend payouts. But then he followed that up with this request, he says, for upping the defense budget. So you're seeing a reversal in the trend from what we saw earlier on this U.S. defense names really tanking. Now Asia names picking up. He's seeking a 50% boost to the annual defense budget to $1.5 trillion, boding well for Asia defense names as well. And that's helping to buck the trend in the rest of the region. More ahead on the Asia trade. This is Bloomberg.
All right, we've got some breaking news out of Australia. It is trade figures for the month of November. The surplus coming in a little bit weaker than expected, about 2.9 billion Aussie dollars. A bit of a contraction in exports there of 2.9%, reversing the gains that we saw back in October. Imports also slightly softer, just a gain there of 0.2%. The trade surplus, as I mentioned, they're a little bit weaker than expected. Not a great deal of change there for the Aussie dollar. Let's take a look at how commodities are performing. Meanwhile, we've seen a little bit of a pullback in copper and nickel prices as well, perhaps a function of traders taking profits after some of the huge run-ups that we've seen in both of these commodities. Longer term, though, the demand picture for both pretty much intact, and Indonesia, which is the world's largest producer of nickel, has already flagged plans to trim back nickel production and better balance supply and demand. Crude prices, meanwhile, a little bit stronger, 56.32 for New York crude. We have had a bit of news flow in that regard as well. President Trump saying that the United States is now going to control Venezuelan oil exports indefinitely, and Chevron also in talks with the U.S. to extend its special license, allowing it to be currently the only U.S. major that is involved in oil production in Venezuela. Well, let's get a little bit more on the longer-term picture for oil. We're joined now by Vandana, founder at Vanda Insights. Vandana, thanks as always for joining us. There's a few time-related narratives around the oil market at the moment. I mean, in the short term, we're back pretty much to where we were before the U.S. operation in Venezuela. But longer term, I mean, Venezuela supplies so little at the moment, but could supply so much. But with oil prices so depressed right now, how viable is more investment in Venezuela?
Good morning, Paul. So amongst all the hurdles that are stacked up for Trump's ambition of U.S. companies tapping the 300-odd billion barrels of Venezuelan reserves, you just mentioned yet another one, which is the outlook for oil prices. And again, here we are not just talking about 26 or 27 for that matter, but longer term, because let us remember, tapping these reserves and rehabilitating the overground infrastructure that is needed to support the movement of that oil is going to take years, if not decades. So assuming that global oil demand is going to continue, growth is going to continue decelerating, which means oil prices are probably going to continue softening. You know, we may not return to $80 and $90 a barrel kind of range on a sustained basis. That will be yet another question amongst everything else, which is political stability for oil companies before deciding to make those kind of investments of billions of dollars in Venezuela.
Yeah, we do need to talk about the everything else as well, because as you mentioned, there are so many factors here. If you were an oil major like a Chevron or Conoco or Exxon, I mean, you'd have a lot of questions around security, future political stability, and of course Venezuela has form when it comes to nationalizing oil assets.
Yeah, not only that, Paul, but also I couldn't look to anybody to authoritatively be able to tell me or guarantee that kind of security and stability. So I could be talking to, of course, President Trump and the core team that is overseeing the transition in Venezuela. I could talk to the Energy Secretary, Chris Wright, but really, who has the crystal ball today to be able to guarantee me as a U.S. major that this is exactly how things are going to play out in Caracas? How long the transition will take? Who will be the new leader? How will the new government operate? How will it operate and under whose influence after Trump is gone from the White House, right? So all of these questions are definitely going to be swirling in the minds of the executives of the oil companies. And then again, let us not forget, it's billions of dollars. It's not a small investment. So again, I think we should differentiate here. If talking about just, for instance, Chevron, which is already in the country, to go in and maybe do a little bit of, modest investments and just get some things back in order to be able to exploit the current maximum production potential, that's one thing. But saying that, putting tens of billions of dollars at a minimum to tap those 300 billion barrels of reserves is absolutely another question.
Okay, so that's on the US side of things. Also worth remembering, as you well know, Vanda, how China was that big market for Venezuelan crude. Where does this leave it in terms of China procuring supplies of energy?
Yeah, so I think the rerouting and reshuffling of oil flows is probably going to be a key theme in the medium term. And one of the biggest affected parties as a result of that is definitely going to be China. So as we know, China was taking the lion's share of Venezuelan crude exports, close to 600,000 to 700,000 barrels per day at heavily discounted prices. So this was benefiting the small independent players in China, often known as teapots, who operate on very thin margins. They are very reliant on discounted crude from places like Venezuela, Iran, and more lately Russia as well. They are going to be on the losing side. I mean, even in the near term, we can already see the US is prohibiting or blocking ships from taking oil to China. So China has already been deprived of that discounted oil that it has depended on for the past at least 5 to 6 years since the first Trump term's sanctions on Venezuela. To some extent, Canada will be impacted as well if the US ends up taking a lot of the Venezuelan crude, which is my base case, at least for the foreseeable future. Canadian crude will need to be backed out and potentially seek home in Asia, again, where China is the main buyer probably, but then for China, does it get the extra Canadian crude at the same price as the discounted Venezuelan? Probably not. So, the Chinese teapot refiners especially are looking at very further thinning of their margins.
At the same time, there is a sense that what's happened in Venezuela is setting a pretty dangerous precedent, especially if the U.S. is going after natural resources in this manner. What is your sense of where it might potentially set its sights next?
Anybody's guess, right? Though there's, of course, a couple of names which are being discussed more prominently, Greenland being one. That will hopefully not rattle the oil markets, but the other one is Iran. Not the same kind of intentions, but we do know, we have seen in the past few weeks especially, Trump amp up his rhetoric against the government in Tehran, and that is a different ball game altogether. So if we see renewed tensions in the Gulf, in the Middle East between Israel and US on the one side and Iran on the other side, we could be in for a very, very geopolitically driven, risk premium driven oil markets going into 2026.
Which could be quite a different situation compared to last year, where that geopolitical risk premium was more or less discounted by the markets. Vanda, thank you very much. Always great to get insights from you. Vanda Hari is founder at Vanda Insights. Now, some other top global headlines we're following. Shares of home builders tumbled in the U.S. after President Trump announced a ban on institutional investors from buying single-family homes. Blackstone, a major investor, pared some losses before closing 5% lower. The announcement is a bid to address housing affordability ahead of this year's midterm elections. Protests have erupted in Minneapolis after an immigration and customs enforcement officer shot and killed a woman in a car during a confrontation. President Trump says the officer appeared to be acting in self-defense, alleging the victim acted in a disorderly and obstructive way. The Minneapolis mayor has called on ICE to leave the city.
What they are doing is not to provide safety in America. What they are doing is causing chaos and distrust. They're ripping families apart. They're sowing chaos on our streets. And in this case, quite literally killing people.
You're looking at those live pictures out of Minneapolis. Looks like a vigil for the victim. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asian markets are faring in the early goings. The Kospi managing to reverse a bit of a stumble at the start of the trading session. You're looking at the region's benchmark pretty flat after sort of running into a bit of a wall with this rally. That was a really bright start to the year. The Nikkei is being pulled under about 0.75%. And we are seeing geopolitics playing out. The likes of Shinetsu, this is of course a big player when it comes to some of the chip-making materials that have been targeted by Beijing. Kosdaq also is managing a bit of that gain, but not by much. Now let's head back to CES in Las Vegas, where Asia tech correspondent Annabelle Jolles is with our next guest. Belle?
Thanks, Avril. Yeah, joining us now is Alex Young. He's COO and CFO at Tuya Smart. So, Alex, thanks very much for taking the time to speak with us. I think we can get started with a bigger picture question, because if there's anything that's really clear out of this CES, I think, is that real move into embodied or physical AI, so the integration into devices now. But how does that actually work for Tuya Smart, and what is your place in the ecosystem as well?
Yes, and thank you for having us, Anna. So Tuya, what we offer is we're running as an AI cloud platform and open the toolkit for any type of hardware developers all over the world who want to design any type of smart devices easily and efficiently. And so through that, we're building developers ecosystems, connecting the manufacturers, the design houses, the engineering, and brands and distribution channels together.
So it's essentially about enabling IoT or Internet of Things and devices. So where are the companies that you're working with? Where are they from? And what are the sorts of geographies that you're targeting? Because obviously this is really a key market for Chinese companies that are looking to get exposure to the US and other parts of the world.
Yeah, so for us is that we're kind of like the really global footprint all over the world. So right now that we help the brands all over the world. Over 7,000 brands come from over 100 countries out there. And behind them, there will be manufacturers cover over 12 countries. So we're working with every single hardware manufacturer basis all over the world right now.
What's the consumer adoption look like? Because I think this is obviously a very specific audience that comes to CES and is really interested in being, I guess, on the edge of these devices. But for the everyday consumer, where are they at in terms of adoption of AI?
Yeah, so for us is that, so those devices my customer built and be selling to, I found that close to 20% of the users come from the United States, around 30% come from Europe, 15% come from China, and 16% come from out of China in Asia, and 12% come from Latin America. And I still have 5% come from Africa and the Middle East. So it's quite widespread out. And it showed us that the AIoT can really help people to make their life easier. So it will be the common demand for the people's life.
I was interested in your latest earnings that you had at the end of last year, that in the call it did come up a few times about this softer demand you're expecting for the fourth quarter, which I found a little surprising, just given that there's usually a seasonality factor attached to fourth quarter demand as well. So how did that actually pan out, that period, and what is your expectation for 2026?
Yeah, I think that eventually the Q4 will comply with what we expected. Will be a kind of the soft term because of the macro economy. We'll find that will be a lot of challenge and intensity through that. But in 2026, we found that we will be bouncing year. The first one is that most of the companies, including my customers, right, people cannot survive in a very conservative level of operation anymore. People still, the nature is grow the business, so looking for to expand. And the second one is that looking around for the CES, we found we have more and more categories which don't have the AIoT before, but they should this time to embrace the AI into their own applications. So which means that we open more new doors and have a larger total addressable market.
So what would be your prediction then in terms of growth in percentage terms? How much are you expecting to expand this year?
I think that for this year, we're looking for to have a more decent growth. So like we expected at the beginning of the 2025, so it will be a good double-digit number there.
A double-digit growth you're expecting for 2026. Okay. Let's talk then about navigating some of the issues, though, because tariffs has been a big one, and then you've spoken a bit about geopolitical uncertainties. Do you see that having a bearing on Tuya this year?
I think that tariffs always challenged. We want to try to do the international business, right, because it's adding cost. But the most problem is not about the cost, it's about whether you have a stable cost. So I think that for the 2025, the most challenging part is that you have a dynamic momentum that people are not sure what eventually the cost going to look like. And so finally, we spent a couple of quarters across different countries, right? We have the segment for most of the countries, and then people know that, okay, what will be the next year cost going to look like? How can I reset the price? And then people know what to do with that.
You're looking to repurchase up to 10% of shares that have been issued in a share buyback program that you just recently announced. Given the size of the opportunity, and you're saying that you can see that big growth this year, why are you looking at a share buyback now or repurchase now as opposed to more aggressively spending on R&D, for instance?
I think the first one, that's we have a deeper pocket that's even actually all the buybacks. I still have enough capital that's to invest on my R&D, invest on my new innovations. So that's the first one. And the second one, that the buyback is show that we think that right now the share price is under-evaluated. I mean, based on what my business model looks like and what the future is going to be. So the buybacks that we think will be, on the financial side, will be valuable for the company to increase my ROE. But then try to balance down that, because the buybacks, people understand that they're going to reduce the free flow. So we try to balance the liquidity and the right ROE of the overall company.
If you think the share price is undervalued, what is the fair price, do you think, or where do you think it should actually be sitting?
Oh gosh, I think that's if you think about that, if we manage to maintain a very good growing speed with a very good financial models about the profitabilities, and also on the right now the market, I mean the sector we're in right now is AI hardware. I think that's you can easily find the right comparables on that part.
All right, Alex, thanks so much for joining us this morning on Bloomberg Television. That was Alex Young there, COO and CFO at Tuya Smart. Paul, I'll hand it back to you.
Thank you.
All right, Annabelle Drewler's there in Las Vegas. And we will have more from CES coming up on the China show. The co-founder of camera tech developer Insta360 is going to be joining us. And we talk about Hyundai Motors' plans for robotics and AI, including closer ties with NVIDIA. That's coming up in the next hour. Well, shares of ZAI have jumped as much as 35% in the grey market ahead of today's trading debut in Hong Kong. The company's building large language models to rival OpenAI and Anthropic, and is the first Chinese AI startup to go public. Asia Equities reporter Sangmi Cha joins us now with more. So, Sangmi, this company's got quite an interesting backstory. Can you tell us who's behind it and what the revenue expectations are?
Yes, and indeed the retail investors' appetite is very strong for this company as well. We've seen among the shares allocated to retail portion was subscribed by over 1,100 times, and we have seen that oversubscription just flooding into the software names as well. And just like you said, it is significant because it is the first ever among the AI tigers in the Chinese AI software makers, that actually challenge the chat GPT maker OpenAI or Claude like GPT models, again, from Anthropic. And of course, we've heard overnight that Anthropic is looking to raise about $10 billion in its own IPO. But again, we have to remember that these companies are just trading with a fraction of that cash and staff and the computing powers that they have from the companies in Silicon Valley. So given that, it is quite significant and quite a memorable milestone here that we have here. And we have to remember that Minimax Group is another of its domestic rival that is debuting in Hong Kong, again, with about the same $600 million offering tomorrow. So it just raises that competition among the domestic rivals. Again, we have a lot of these names, but they're very different in terms of their pedigree. So Zhipu actually focuses on targeting some of the domestic institutions. So it actually has a more competitive edge in that space.
That's really useful context, Sangmi. Talk to us about whether these two AI startup listings this week sort of set the tone for what we might expect for the rest of the year.
Yeah, so we've been actually seeing, especially in December last year, a lot of these IPOs coming both onshore and in Hong Kong. Especially, we're more focused on those four little dragons, as they call it, the GPU makers. And in fact, we have to remember that Illuvator CoreX, which is one of these GPU makers, are also listing in Hong Kong today. But it is just a listing spree that we have been seeing. And this will continue. Of course, we've seen that spill over into these software names like Zupu and Minimax. But again, these are the trend that we're seeing here. And it is still a cautious tone that the investors are reminding us, because this is, again, very easy to get ahead of the fundamentals. Again, of course, because these companies are offering these shares to the public ahead of even the American software makers, but still it is something that it is precisely because these companies want to raise funds for R&D purposes. In fact, Zupu actually is going to be using 70% of its proceeds to fund its R&D. And so all of this actually comes down to, after several of the years, who are going to remain as the top choice.
Sang-Mi, thank you for getting us set up for these listings. Bloomberg, Sang-Mi Cha in Hong Kong. Now we'll hear more from ZAI co-founder and chairman Liu Debing in an exclusive conversation later on the China Show. That's at 9:30 a.m. in Hong Kong, 8:30 p.m. in New York. We have more ahead on the Asia trade. This is Bloomberg.
Time to check some of the stocks to watch when markets open in Hong Kong and mainland China. Keep an eye on defense stocks as US peers climb in late trading, with President Trump saying he'll request a 50% increase in next year's military budget. Some names on our radar in China: AECC Aviation and AVIC Shenyang. Avril.
Also on our radar, Paul, take a look at Samsung managing to reverse the declines you saw in the early goings as its preliminary earnings came more or less in line with estimates. So there was a bit of that sell the fact effect. But I think investors are also focused now on longer term, mid-long term demand for its memory chips, which of course Samsung is a massive, massive player in. We are also seeing that helping the Kospi to reverse the declines in the early parts of trade. Watching as well some of the defense-related stocks. That is really helping to offset some of the negative sentiment in the markets. In terms of futures in the Greater China region, this is the setup going into the start of trade in the next hour. Hang Seng futures pointing to those declines. That's it from the Asia trade. This is Bloomberg.